Good day everyone, this is Patrick from EasyFX Code Trading System, and it's Saturday, the 29th of February 2020, and this is the weekly analysis for Euro, Cable and Aussie dollar. And you can see that for the Euro, it has gained against the US dollar and also at the expense of the pound, and the Aussie dollar has continued to fall further deeper into past its lows for quite a while. And let's start off with the euro, where it has managed to find the support from an end of the previous week and managed to break out higher past the 109 level and then the key 110 level, and above the close well above the daily 55 EMA, and spiking through the 78.6 Fib retracement level. So this is a strong recovery for the euro at the expense of the US dollar. And there was some positive news from especially Germany with preliminary CPI on Friday, slightly better than expected. And this week there's a few PMIs, the final manufacturing PMI on Monday, followed by a flash estimate of their CPI on Tuesday, and then services PMI on Wednesday. And next week will also be a potential preview of the following week, where the ECB is due to announce their rate decision on the 12th of March. So we'll see how far this recovery is going to hold and continue. There is already a intermediate resistance up here at the 110.60 area. We can perhaps mark this as support now, as it has closed above the 110 level. And let's move this intermediate zone. It's actually at this level, so we don't need it for now. Alright, and there could be some consolidation first in the beginning of the week, and before it attempts to try to break through this resistance zone. If it falls further below the 109.60 level, then it could retrace further, but perhaps it's still above the 109 level. So this is going to be a key support if the 110 does not hold. Alright, and it will also be exposed to the US non-farm payroll report on Friday. So we'll see what the direction is then. And this is the cable. Cable has not done well and could not close above the 130, and this downtrend line has been a significant resistance, as it could not break above that, and fell for the last 3 days of the week. Fell through the daily 200 EMA, where the intermediate support was. Let's move this to this zone here, where the S2 weekly pivot was. This is 128 is now the key support. It has closed above that for the last week, but it's still in danger of being breached. We can move some of these fibs to the most recent move. This is a bearish continuation move from the 132 level, and once it fell below the 128.70, it has spiked through the 138 fib extension. So this is going to be the key support zone if the 128 level does not hold. Right, you can see on the fall time frame that on Friday is where the massive fall was. It fell through weekly S1 pivot and then to spike the weekly S2 pivot. Alright, so this week there's the 3 PMIs, the first half of the week with UK final manufacturing PMI on Monday, construction PMI on Tuesday, and then the final services PMI on Wednesday. Right, the Bank of England's rate decision is not until the end of the month, end of March. And of course on Friday is also exposed to the US non-farm payroll report. So with this last minute recovery at the end of Friday to close above 128, we'll see some pullback towards the previous swing low at the 128.70 area, and we'll see whether it's able to climb up higher to reach the 78.6 fib retracement level. Alright, if not, then if it does not break above the daily 200 EMA around the 128.50, then it's going to retest the swing low for the last week, and we'll see whether it's going to breach that and target the 162 fib extension level at 126.63. Okay, we'll also watch out for what the new weekly pivots are Monday. Alright, it's also exposed to the trade negotiations between the Eurozone and the UK, so there's a lot of uncertainty there as well, apart from global recession fears. Let's move on to the Aussie dollar. And the Aussie has not been able to recover after falling below the low trend line of the triangle. That was the previous week, and extended its fall all the way through the 200 fib extension level, but then also recovered towards the end of the week. To climb back above 0.65, but only just barely. So there's potential for a retest of the swing low, which is at the 0.6434 level. So this is now at 162 Fib as a resistance zone. And this swing low is going to be key support level now. So mark this as an intermediate. Zone here. As if it does fall further, there's still a lot of room to move to the 262 Fib extension level. But next week there are a lot of news every day for the Australian economy, with the Chinese manufacturing PMIs on Monday, which will affect the Australian economy as well. Then a key RBA rate announcement on Tuesday, followed by GDP on Wednesday, and the Australian trade balance on Thursday, and then on Friday there's retail sales. So a lot of news coming up for Australia next week. So, and as well as the US non-farm payroll report on Friday. So a lot of exposure to some news drivers, and apart from just the impact from the Chinese economy. So this is going to be the key trading range for next week. The 162 Fib around 0.6580, and down to the 200 Fib at 0.6476 or even lower. Alright, so do watch out for my other videos on spot gold and dollar yen, safe haven trades, and we'll follow up on Wednesday with the midweek analysis. And do have a safe and profitable trading week, and cheers then.